Hey guys, good afternoon. Good afternoon. So we had a interesting day. Um, broke one of the break evens, and I was able to figure out where they put the second one. So that was a good day for me. So we had our first break even target reached right here at 59.3450. Then they pulled back, hit the second um, level for the daily one, and 59.39. Then hit the Arval 3 and pulled back. And I was able to figure out my calculation where I believe they adjusted this break even to, they can move it out to a specific location. And you try to figure out where they move their Easter eggs, right? And so even though it was right below 59.50, you know, the put that everybody wants to hit, right? They go to the light. We all move to the, high open interest. It attracts it like a magnet. So, I was able to figure out where they put it, and I was right. I mean, because when they put a break even on there, they give themselves a little bit of distance so they can put a lot of, you know, buffers on it. So they definitely were buffering this, hedging down. They didn't slam it down. They don't want the market to sell off. They just wanted it off their break even. They have pushed their break evens out so long and so far already that it probably cost them a fortune to re-hedge. So that's the problem. So now we have our settlement, and you see the market on close going right up, trying to hit it. Going to try to get up there and knock it out. Um, but this 1792 is blocking them. This is, that was the key for today. Now tonight in the London session, 2:15 in the morning. Oh, see, they just broke it. So they're already, the VIX is closed, right? And so the London session at 2:15 is likely to just sell off hard in my mind because OpEx doesn't end until the end of the day. Now, I know that they're going to be closing positions on the RTH Open, but I give you 100. This doesn't matter that they broke it now, it's after the settlement. So, but they're going to need to get it back up tonight and up off that level, 37-day one. So it'll need to be up above that. So my guess is they'll probably sell it hard tonight. We'll see if I'm right. Okay. So we'll, if I figure out their break even thing, I'm going to be real happy. And I think I just did. I really do. I really think I got I mean, I know where the first one is, and it's just a matter of multipliers. After that, figuring out which one they use and which multiplier do they apply it to. And I think I got them cold today. As soon as I put it up there, here you can see my line. I knew that it wouldn't get hit because of the buffer that they gave themselves. And this little bar here. This is their order. This right there has got the heat on it. What was that open? 40, 59, 41.50. So see, they're not able to break through it. That's their order to send it down. Right there. So very good. So expect a bit of a sell-off tonight. Um, the NQ doing great. It got up to its upper daily one today, just textbook. There's your daily one closed, daily one open. Came back to the R ball daily ones, and this is a bullish market. There's no selling this market. I'm not saying that they're going to sell it off. They just have to get through OpEx with this 1792, and I need to figure out when can they start closing that and rolling it to the next OpEx. It is a PM settlement, so I guess that means they have to hold it to the end of the day. But I know they start rolling it before the end of the day. Um, I mean, they could roll it any time tomorrow. They could roll it on the RTH Open, but they're not going to roll it at the Globex Open. They'll roll it at the RTH Open or any time after that, but probably I would think after lunch, sometime after lunch, they'll roll it, and we'll know because that level will break and they'll be able to go down further. Once they break it and get a good close below it, the level's going to shift. See, that's the catch 22 with these calendar day levels. Um, they're dynamic. So when you get, a big change, it's going to shift the level and shift the calculations. A monthly range is tied to the number of days in the trading month, and that's, on the open or close, and that is more stable. It stays the same the entire period, same as a weekly or, quarterly. But when you do the calendar days, it's always shifting. It's like the shifting sands. And anytime you get, a new high or new low, it's going to change those calcs. And just depending upon the degree of, you know, change of that new high or low, will you get a change in the calc? So, but for right now, they have to have it above that line, or it's going to cost them a lot of money to move risk out on the day of OpEx. So, if it does break, they've moved their risk. That'll tell us that they've moved their risk out and to the next OpEx. But they use calendar days. I mean, right there's the one, the 37-day one. And if you don't understand the concept, I'll just tell you again, it's the bell curve. Inside the ones is the delta neutral. They don't care if it's one tick in, as long as it's in, they're delta neutral. They don't want it to close outside. And on OpEx. So you get some wiki things, but as long as it closes back in. And I'm not saying my levels are 100% matching theirs. I give myself a tiny bit of fudge factor in my calcs so that I hit my lines. I want to be successful in trading. I don't want to wait, make sure it's, exactly um, the full amount. I do put a little tiny bit of fudge factor on my lines because I want to hit them. But they do too. I've noticed they do the same thing I do. Um, but it's very, very close. I mean, it's so unnoticeable that you would never notice unless I told you and showed you. So anyway, I mean, it's minuscule compared to these large ranges. But it could account for a tiny bit of offset, like a tick or two, but nothing more serious than that. So, anyway, so yeah, it's all good. I'm learning. I'm figuring out their methods. I'm very happy with the new um, volatility I'm building, getting the grok to work with me to be able to see the skews for the volatility between my open and close is amazing. I mean, I saw that for the first time yesterday, and it blew my mind, being able to see a skew. Not yesterday, I guess it was the day before. Yesterday was more of an even skew, and I am very, very happy with it. I tried something a little bit different this morning, but I'm trying to figure out which type of report to run and get a framework that's going to be consistent to be able to generate these reports quickly. The report that I had started building with QuickStrike was so large and required so much data that you get these messages in Grok saying that I've exceeded my 25 uploads, or you only get to load 25 data points in, and it starts forgetting data that was previously loaded, and it obviates the entire thing. So it gets to the point where it was just a little bit too big, and I need to bring it down a little bit or separate the report. And that's what gave me the idea to separate the volatility component and then do a separate option component, and then do a like ask it to review the one, then the review the other one that we just built, and then give me a composite summary. And that's what I'm trying to get to. So I'll have it worked out, but trying to get them all into the same report is just too big. Um, Unfortunately, I can't afford the $200 a month plan that ChatGPT wants, and Gronk doesn't even allow you to. Well, I guess you could s- pay it a lot too, but for the $20 a month plan that I'm on, it doesn't give. I guess Grok is more. I think I'm paying like 60 or 80 a month for Grok. It's expensive, but so I'm paying about 100 a month for both Chat and Grok. But I love it. I mean, it's allowed me to learn so much, and the learning curve is um, existential. Would never have been able to get a lot done, an understanding of my work without it. So I think it's well worth it. So definitely try it. You should be, putting these levels in yourself to the AI agents and asking them to give you some analysis, and just being able to compare, here's the weekly, here's the monthly, how is this going to affect the daily data today? How will the option positions, how will the dealer positioning affect it? How will the gamma affect it? And then putting the pieces together is very helpful. But I have stumbled on a few things that I was able to figure out on my own, and I'm not kidding you. You can't go and find this stuff on the internet. There's nothing written down about how I've been using open interest with my levels. It's crazy, and it's worked so well. I mean, it has worked every single day. I can tell where a lot of these levels, the dealer positioning is now just having the right levels, having the right PT123 levels. And it's not only the daily. I mean, let the goosebumps start crawling up and down your spine, because it's also on the weekly and it's also on the monthly. So that's the point where I'm trying to get to, is where I can, map out how much room do we have for dealer positioning with the volatility levels. As you saw today, the dealer positioning started out on the PT1, and then they pushed it out a little bit to the PT3, and then they moved it. So I'm starting to figure them out, and I'm starting to figure out, you know, what they're doing when they had the market, approach it again. Um, their little adjustments and how they control the market, get it back under control so they can flatten it out. It's not that they don't want the market to go higher, it's they are already so overstretched. Like I was mentioning to you in the prior video, they had the JAEQX um, long put down here that they had to hedge. And now they have the short call that they're edging, and they're pushing it out, and don't really want it to go that far before we get a pullback, whenever that is. I mean, the news has just been incredible coming out of everything that we're accomplishing right now. They're bringing in trillions and trillions of dollars into the United States, and instead of it going into the politicians' pockets, it's going to go into the country, into the United States, and offset deficits, offset, companies coming in here to create jobs and employment and manufacturing and GDP. I mean, this is amazing. I mean, this is like, it would have never happened in a trillion years. It never would have happened had the Democrats retained office. So it is a huge victory. And I think it's going to help the world. Like I kept saying that, it's like if they would just wake up and realize that together the commerce can build all boats together. And that's right. So hopefully Canada will get on board too. Let us take some of their Alberta oil through the Keystone, get that, flowing to all places, get the energy costs down, refine it into products that we can use and ship and provide to people everywhere. And but I think the hugest impact of all of this, the largest impact, is it's not going into offshore accounts by the corrupt kleptocracy politicians for the first time in decades. So, I mean, that's just huge. It's going to come back into the economy where it should have been. That never should have been allowed to fester the way it did and to get to the point of no return as it did. So, I'm so grateful that they shut it down, and hope to God that we can keep it shut down and grow our economy. And so, with all of that, I will let you go. I think it's very bullish. I mean, even Bloomberg turned around, even CNBC turned around. They're all singing from the new hymnal. Even it's just cracking me up. They're all, you know, bullish now. The Goldman Sachs, can you imagine? Um, change their tune also. So everybody caught, wind of this opportunity. And I really do think that we could take this market so much higher. What did, astonish me a little bit today was gold broke my daily ones and went to the daily twos. So 68% of the gold daily range. But for ES for June, we have a chance uh, to hit that 6,000 for sure, easily. 59.82 for 60.15, and then 60.51, 60.94.25. So between 60.51 and 60.94 um, is my target, 60.50. And we could we could even go higher than that. That's just the ones. We could come up to that 62.15, 61.85, hit this other high. I mean, and even higher. I mean, there's really a huge opportunity with this market. So um, they're just going to be trading to break evens and then try to apply the brakes when they are overstretched. I don't think that they mind moving break evens during normal conditions, but they're already hedged, right? Um, on that short call. 5880 SPX. Nope, not 5580. Dummy. I think that's right. So they're hedged again. See this? Look, they held it in that little pocket. Isn't that cute the way that the distribution went up like that? And now they broke this. So they're long again. And so they're just hedging each break even in the daytime. It would be so much nicer if somebody would pick up the phone and call me and tell me exactly what they do, but I guess I won't have to wait for that conversation. It will never happen. That's okay. We can figure it out. You're not going to find it in a book. You're not going to find it on Twitter. You have to be able to look at your charts, understand where these levels are, and then see how the dealer reacts to their daily ranges. And then what do they do when that range breaks, like today? And they didn't take it very far. Like they did Tuesday, they gave us more room. They had some range breaks on Tuesday, but they didn't take it as far as they did on Tuesday. On Tuesday, they broke it. Well, I guess it was about the same distance. So, but we're definitely in the nosebleed section as far as, hedging and costing them money. My heart doesn't bleed for them, but because they make so much, but I know that we need them and I don't want them to be broke. So we can trade within their ranges, and it just really helps to know what those ranges are, doesn't it? Makes it a lot easier. All right. So that will come off tomorrow. And once it's broken, it'll stay in place until broken. And considering that 5950 sitting right there with probably a lot of open interest on it. Let me go look at it real quick. Actually, it doesn't look like it's that much. $6,000 is the volume. And the open interest isn't that much. That's what I was noticing. So there's very low open interest. Yesterday, the anomaly I saw and posted a comment, somebody had put up a 5715 order that was ginormous. 5715. I kid you not. Way down here. And that drew the market down. So we could perhaps notice at 5 o'clock the same thing today. I'll keep my eye on that and see if that happens again. Right now, it's not. Right now, it is not. So, but I'll keep my eye on it. If that changes and let you know. But they're gonna have to do something to get this VIX off of that 1792 by, the time that they can roll it out. All right. Hope y'all have a great day and the rest of your day, and I'll get the reports out, the Globex reports for tomorrow, and we'll see you in the morning. Thank you. Have a good night.